So from a defense perspective, larger incentive given. There are conditions that those imports should be by PSU. However, also there are exemptions on the civil side of the aerospace and defense, where parts for manufacturing have been given exemption from customs duty. So that's one sector. Also, if you look at some other sectors such as minerals, clearly incentives given for rare earth operations. So that's very important, and also nuclear power, where exemptions have been enhanced. Also, fourth is the energy sector, where a lot of incentives are given around EV batteries rather, which is going to be used for mobile phones or electric vehicles. Those exemptions have been extended. So effectively, they have looked at some of these sectors, which I said are core sectors, and focused on Make in India. So that has been a continuous endeavor which is going on. Uh, Export competitiveness, interesting to see, because we've seen the US tariffs hitting some of these sectors. And therefore, if you look at sectors such as marine, textiles, leather, including footwear, uh, all these three sectors which are export oriented and have had this impact of US tariffs, they have been incentivized to an extent that the raw materials which they get are getting duty concessions now, uh, provided the finished product is exported out. So again, export incentivization and competitiveness is something which has been a very interesting theme. Third, as I said, trade facilitation. There are various trade facilitation programs. There were duty deferrals for 15 days. Now that has been extended to 30 days, which clearly helps the working capital needs of a lot of businesses. Uh, from a certainty perspective, there is a concept of advanced ruling which was there for 3 years. Now that 3 years has been extended to 5 years. And interestingly, globally, it has been 3 years. So India has taken that additional step to increase this to 5 years. So as I said, these three themes, both Make in India, export incentives, and trade facilitations have been there. I'll just quickly touch upon one more aspect. On SEZs, we heard policy announcement. This is something which has been asked, and the industry has been looking forward to this. However, we need to wait for the fine print, because this was a policy statement, how changes happen. What is proposed is a one-time scheme, as it was mentioned, for allowing SEZ to sell to the domestic market at a concessional rate. Today, when SEZs sell into the domestic market, it is import, and full duties of customs, as if they are import from outside India, are levied. So there is going to be a concession. There is going to be a cap on what extent these sales can be made to the domestic market. However, we'll have to wait for the fine print to see how this works out.
Right.
Uh,
And just as a, for someone who's, I mean, SEZ as a concept goes back several decades. I'm not sure how we measure its success as a concept, but what would you say, or rather, where do you say, would you think that SEZ stand today in terms of their efficacy for what they were created? And the tax intervention that you just spoke of, is it really trying to maybe address a failure rather than a success?
so, what this is trying to address is a lot of SEZ today have unutilized capacity. So, because there are no income tax benefits, there was already a sunset clause. What effectively is there are duty exemptions on imports, which they would have already availed about 5 or 10 years back on the capex. Now, given what they have already availed, there is a lot of free capacity, and therefore there that free capacity is what is proposed to be utilized, but allowing them to sell into the domestic
Hmm.
market at a
Got it.
concessional rate. So that's the objective which they're looking at.
Got it. So I picked up, obviously on the reduced duty for items of personal consumption that's brought in through baggage while traveling from overseas or through parcels. So is there are you seeing any larger sort of strategy or approach in that, or is it a general
So
reduction
I
because
think
people have been
it's
asking for
it's
it?
a so one, in terms of baggage rules, we had these have been there for a decade now. 50,000 now, factoring the inflation, 50,000 rupees is not getting you anywhere. So that has moved to 75,000. So that is one. The duty free allowance has moved from 50 to 75. So that's something which has happened. I think it's just factoring for the inflation which has happened over the period of time. Second, above 75,000, there was a duty rate which was 20%. Now that has been brought down to 10%. So again, that is also rate rationalization because most of these products are now pegged at a lower rate. So I guess both are just in terms of tariff rationalization and the need of the hour rather than anything.
Right. And if I were to just go back to the export competitiveness that you referred to, let's say in areas like seafood exports or apparel, do you feel that the industries that were worst hit by the tariffs, and I'm talking really now about the US tariffs, the 50%, 25 plus 25%, would they benefit? And if so, to what extent, even in an approximate sense?
So whether they would benefit, I think it's a little early to comment.
Sure.
And why I say that, and just take marine as an example. So marine, seafood, etc. There was exemption which said 1% of your export values. To that extent, you can get raw material which is at a concessional or no customs duty. Now that 1% of export value has increased to 3%. Now whether that would be sufficient to cushion the US tariff, I think we'll have to wait and watch. But the idea is that there is a focus on some of these sectors. So that is one example of marine. Footwear, so leather was another which the exemption has really broadened, also including footwear and some upper sole. So they're going down to MSME to also encourage export, which is just for soles and not only footwear, so that they could also enhance the exports to the US or other regions where India is also looking at free trade agreements.
Right. Uday, let me come back to you. So, is there any change at all in the personal income tax space? And if so, what?
On the personal income tax, as I mentioned, Govind, there was a major overhaul which happened last year, right? And up to 12 lakhs, no tax, and then up to 24 lakhs, a minimum tax of 3 to 4 lakhs. There was an ask certainly to more rationalize it, but not on the on that front. Nothing has there is no change which has happened on that. In fact, there was a ask of giving an interest deduction on the housing loan, which is really becoming expensive, right? That's also not available under the new regime. So there has been no change, I would say, on the personal tax at all, which has happened to the best of my knowledge, even on the higher side that I can see. In fact, again, the ask was that with a higher level, the tax rate of 39% is extremely high when you take it with a surcharge, and possibly the surcharge may be kept at 15%. A lot of discussion happened on that, but no change on the individual front at all on that. Yeah, in terms of the taxes, I would believe we're not expecting much. Certainly for the common man, for the income
Sure.
up to 12, 24 lakhs, which is fair, but not even on the higher slab. But the 30% rate comes at a very early stage, right, at 30 lakhs. And if you look at or the 30% rate at the highest level is okay.
Yeah.
So it could have gone up significantly, and the surcharge has become now a way of collecting more tax rather than when it was introduced. It was more in emergency situation. Jay would possibly agree. Jay, our good old days of discussion, surcharge introduced in.
The other thing, Uday, since you mentioned it, the other interesting thing is surcharge is kept by the center.
Yes.
I'm not wrong.
So,
Like a
It is
cess.
not shared with the states. So to
yeah,
have a higher surcharge is better than having a higher base rate
that's
from
true.
a central government point of view.
Yeah, and then you talk only of 30% as the maximum rate. So I think, but yeah,
Right.
it has become a part of the tax rate rather than the emergency
And the same
situation.
applies to corporate tax as well, Uday? I mean, no real
Yes,
change.
no corporate tax. I think there are lots of policy related changes which Jairaj mentioned, which happened, but the tax rate remains the same. The surcharge, everything remains the same. I don't think there is any change in the base rate per se of 22% or 25, except for the dividend tax. They have kept it at 22. Sorry, for the buyback they kept it at 22, for promoters or 30, as the case may be. But yeah, other than that, no tinkering on the tax rate and surcharge, which
Right.
in a sense
In
is
fact,
good. Which in a
yeah, so
sense
I
is
wanted
good.
to get that out of the way, that basically there are no changes on the personal tax or corporate tax, because people do
On the
feel that there
rate,
may
on
be
the rate.
something
Yeah,
hidden
yeah.
in the bill. Yeah.
Yeah, I think
No
the
change.
major change was GIFT City, which Jairaj put in very well. Even after 20 years, the tax is 15%.
Okay.
So, which is
That's right.
really good because, if you had
Even when it
a lot
becomes
of
taxable, it's prescribed at a much lower rate of 15%.
15%, which is, I think, a significant, reduction, because if you're a foreign company, banks or insurance, reinsurance operating as a branch, then the rate is 35%. And with the surcharge, it goes to 38%. So 15% actually, in my view, even indirectly addresses your future pillar two if it happens, right? You already collected. Now, for 20 years, there is no tax. Uh, there could be an impact on the pillar two. But even uh, uh, after 20 years, 15% to say today. Now, after 20 years, you ask again a question, how long it will last, we don't know. But as it stands today, the government has given a commitment that for next 20 years, zero, and then 15%. And in certain situations, as Jairaj put in 2047, at least those bold statements are being made and actually incorporated in the law as it looks today.
Right. So as we came into the budget today, and Jairaj, one of the points, and I'm talking about direct tax for a moment, that there was a expectation that we will see some sort of announcements on tax certainty, perhaps even a reference to the Supreme Court judgment in the Tiger Global case. So that has not happened, but the silence could also mean something. So are
But
you
I
taking
would say the certainty part, certainly the part B on taxation, the real winner is transfer pricing. Actually, we haven't spoken about it. But
Yeah.
on transfer pricing, there have been several measures which have been put in, which leads to the certainty reducing tax litigation. I can tell you, it's like the clubbing the entire IT services in one bucket, right?
Yeah.
Software development, knowledge outsourcing
Yeah.
at 15.5%, which is most of the companies are at 15.5%. Keeping the safe harbor at that level, 15%, is very welcome step. Okay. And now the tax officer, in fact, in a safe harbor, you have to go to the transfer pricing officer still for the assessment. No longer going to be the case. So I think that's one major change on transfer pricing, more from a foreign companies operating in India. Okay. And then the APA period, unilateral APA period, will now be 2 years. That's what has been prescribed. So we're trying to complete that in 2 years. At the ask of a taxpayer, it can go to 6 more months. So there are a lot of those kind of changes which have happened in transfer pricing, I would believe, where
Yeah, I think the
the
transfer
tax
pricing
litigation
route,
will go.
Uday, you're right. Transfer pricing, some very good initiatives taken, because even on the APA front, if you made an adjustment on the affected party, the associated enterprise still paid up the tax. Now, if you have an APA signed, then they're allowing you to modify your tax return within a period of 3 months to recognize that lower income. So that's great news. I think that's excellent. But it is to be noted that this applies to APAs signed on or after April 26, 1st April 26. So that's one important thing, not for the past, for the future, but it's a very good change. And the other thing, apart from the infotech being clubbed all into one IT services, I think the other big change is that they've moved the threshold from 300 crore rupees to 2000 crore rupees, which I think is
Yeah.
good, because given today's world, you need to have something reasonable, and 2000 is a good number to sort of work with. So I think very positive changes on the transfer pricing front. What I was not very happy with is retrospective amendments still do continue, although more at an exceptional level, but there is a lot of litigation going on currently in terms of three or four areas. Like, if the DIN number has not been quoted in your assessment order, is that assessment order valid or not valid? And various courts have held that it is not valid. Similarly, there is, if the DRP, the draft assessment order is referred to the DRP, basically now what they're saying is uh, that the DRP period of 9 or 10 months will now be added on. So effectively, your assessment date has got extended by that time. Similarly, the notice issued to you, if it was not issued by the jurisdictional assessment officer or the FAO, there's a lot of litigation on that. So on count of saying that we are trying to settle this litigation, they have made retrospective amendments going back to 2007, 2009, 19 and 21. There are 4 such changes made. So all of them are retrospective. But the sad part is that all of them have been made only to the benefit of the revenue. And
Yeah.
despite there being judgments in favor of the taxpayer, none of these 4 amendments which are retrospective have been made in favor of the taxpayer, including calculating the number of days for TP assessments to be completed. And they were missing it by 1 or 2 days because it was 60 days and not 2 months. And therefore, courts have ruled in favor. So I think that is one change which I'm not very happy about.
If I can interject again, so one of the statements or announcements in the budget was honest taxpayers willing to settle disputes will now be able to close cases by paying an additional amount in lieu of penalty. So what does that really mean?
So what they have done is 2 things. One, several penalty clauses, and these are for relatively minor things. You can just pay up a fine and close the chapter. So there are several provisions where penalty has been converted into a fine and the matter will be closed. There are several other cases, similarly, not penalty but prosecution, where they've taken 2 or 3 steps. One, that the period of imprisonment has been reduced, rigorous imprisonment RI has been converted to simple imprisonment, and they've also sort of gone ahead to say that we will make a lot of the minor offenses non-criminal offenses. So you end up just paying a fine or some penalty and closing the chapter. So I think these are all excellent steps. What we do need to note is that one change they have made, which is again to cut out litigation and delay litigation. The way law works currently is that you have an assessment order. If the tax officer wants to initiate penalty, he initiates penalty as part of the assessment. After that, the process of penalty, levy or non-levy starts. So show cause notice is issued, you get an opportunity to make your point, and if it's accepted, no penalty is levied. If it's not accepted, you go and appeal. But typically penalty has not been levied till the appeal process is decided, at least up to the commissioner or tribunal level. Now what has happened is they want to complete both as part of, integrate both into one, which means that part of the assessment process, you will now get a show cause notice if the tax officer wants to initiate penal action. And he will take a call on that and he will decide while passing the assessment order whether to levy penalty on you or not. And all they've said is that the interest which is there up to the first appellate ruling will be deferred. So,
Got it.
this is not, so this is some
Jairaj,
fundamental change that is happening now.
Right, Jairaj, I'll come back to you. Gautam, you wanted to say something?
Yeah. So just on penalty, one of the misses or the expectation was around customs amnesty, that there should be a waiver
Yeah.
from interest and penalty for historic cases and maybe a partial payment of duty. So I think that's something which has not come through, and similar to corporate tax, what they've said is you can close cases by paying a charge in lieu of penalty. And I think that's just a nomenclature change from penalty to the word charge, primarily because in corporates and listed companies, penalty would have a connotation in terms of various other legislation. So it's just a change in nomenclature which has happened from penalty to a charge. But I think the larger miss is not getting the amnesty going for customs, which has been there for a few years.
Right, and I did speak to some of your colleagues in indirect tax, and they were all expecting this to come,
Yes.
which really hasn't. Uday, I'm going to come back to you in a moment on sovereign gold bonds because there's some interest in that. But if I were to stay with you, Gautam, so 2 points. One is to do with this single and interconnected digital window for cargo clearance approvals and the customs integrated systems which is to be rolled out in 2 years. Now, all of this somehow I thought was always there, and it seems to be now coming. Or so, can you give us some context for those who perhaps don't know?
Okay, so today, as what is happening, if you look at customs over the last few years, there are a lot of licenses which have come in, and there are, as we call, a lot of participating government agencies. So if you're importing food items, there would be food and safety regulations, and if there are chemicals, there would be the chemical ministry. Electronics, there would be MeitY involved. So there are host of licenses or approvals for goods coming into India, and therefore you need those multiple licenses from multiple administrative agencies. So to get that, duplicacy go away, the concept of customs integrated system, which is a single window clearance, is being proposed, which would mean that I would just put in an application for clearance, and the customs would then coordinate with the various ministries. I do not need to go and get those approvals. So that is what is being proposed
Right.
uh, over a period of 2 years. And uh, looking at some of the imports which are contributing up to 70% of the import trade, and some of them around agricultural products, etc., which are there. That is coming in phase one, which is the end of this fiscal year by April 26. So they sort of put a phased approach, which I can say phase one, phase two. By phase one, which is April 26, 70% of the trade should be covered. So that is what is envisaged, that you have a single window clearance, so that the trade can get n number of approvals through a single application, rather than putting the multiple. Today, what we have is, yes, an EDI system. Unfortunately, it's not worked as we would have thought. So we hope that this projection and coming out with the integrated window sees the light of the day in coming years.
Right, and I'm going to come to sum ups from everyone in a few moments. Uday, on sovereign gold bonds, now there is going to be a tax, or rather full capital gains, if you sell bonds that you've acquired in the secondary market, as opposed to having bought it at the time of issue. Now, was there something that was obvious that we should have known in this, or is this a clarification?
No, I think in the past also for similar instruments, people have used it that on the maturity, the whomsoever is holding gets the tax exemption. So the objective here is that only the original bond holders who own the gold bonds and till the maturity should get the exemption. If you have bought it from the secondary market, then the exemption should not be given. So I think that's the objective of holding it on long. You don't want people to trade, I think, and take a benefit because it is going to be, XYZ is a period and you bought it a year before. You're just getting the tax exemption. So I don't think it was obvious. Maybe it was in the offing, but the objective seems to be that genuine bond holders who hold it all the way up to the
Is
maturity
there
should
a
get the
change?
exemption.
No. So my question really is there a change in policy here? Because this sounds like another, because going back to our earlier discussion, like a retrospective amendment in a smaller way.
It is, yeah, it is not retrospective. I would believe it will be for the new gold bonds. I have not seen that part.
Yeah.
Whether the original holders, sorry, the people who hold it till 31st March 2026, whether they will get grandfathering or not, I have not seen the fine print on it, honestly.
Okay.
So certainly this provision is going to come into effect from April 1, 2026. So one would have to see whether it applies to the past or not.
Right. Okay. I'm going to now get some quick sum ups. Jairaj, let me start with you. So I think you gave
No,
us a
just
broad
sorry.
overview.
Generally, just one point I'm just
Okay.
saying, which says the taxation applies when you earn the income.
Yeah.
If that's the concept, then whomsoever earns it, whether the new bond holders or the existing, will pay the tax, because the law in the past did not give you a grandfathering for the existing one. So I'm saying maybe it may be looked into it, but I'll have to see the fine print.
No, because if it's if you there were one class of investors who were entitled to a tax-free income, and that's changed for whatever reason,
Yeah.
that could put a
No, it
question
could
of
change.
all
It could change.
tax-free.
Yes. But certainly it is effective from April 1, 2026. So the new bond holders will certainly be covered by that situation
Okay.
of
Okay.
taxing. Yeah.
Okay. Okay. Quick sum ups. Jairaj, I think you gave us an overview, including of non-tax announcements and pronouncements in the budget. And how are you seeing things? So, when we went into this budget, we had a certain set of expectations. A key expectation or a belief was that we are in a globalized world, which has changed dramatically in the last year, for which we need to do much more than perhaps what we do incrementally. So, from that point of view, do you feel that this budget delivers? And if not, then what else does it need to do? But a quick sum up, and I'm going to come to all of you with the same question.
So I'm just before I get to that, I want to touch on one thing which we did not cover at all. which is the changes proposed in the minimum alternate tax. So there
Yeah.
are a couple of changes there, and now the MAT is going to be deemed to be like a final tax. So
Yeah.
that is the tax liability, and you cannot carry forward anything for set off unless it's in the new so-called new scheme. She's called it a new scheme, but where there will be, there was no MAT, but you'll be allowed 25% of your tax liability as a set off, and the rate of tax has been reduced to 14% from the earlier 15%. So that's one thing I just wanted to touch on. In
Sure.
terms of just overall summarizing, I think if one were to look at the reforms, there's a whole plethora of reforms, and they're announced in different areas, different spaces, with probably the idea that the government wants to focus on things like certain sectors that they decide require that focus. So I think to some extent it's been a little bit like a machine gun approach, spraying the thing and going across various sectors. So there's no big bang reform that I see announced as part of the budget. I don't know whether one can call it a missed opportunity. I think with what all that is happening around the world, India could actually seize the opportunity to make some fundamental changes and reforms, which we've been maybe sort of pushing to the back burner. So I think in that sense, I feel we could have done much more. In terms of the tax changes, we have a new income tax act. So, I don't know how much more change you're going to make. There are already quite a few changes that have been proposed. In
Right.
fact, the new Income Tax Act. So, from 1961 to 25, you had one law. You introduce a new law, which is simplified, and then you make amendments to that. So, I guess from that point of view, I would say, all the changes that have been made are still too many from a stability, certainty point of view. But many of the changes proposed are also to look forward, to rationalize, and three or four changes, as I said, are long term, which I think if they do that, that is great news, to make most of the changes, if not all, more on a long term basis, because it's not just the rate of tax, it is the stability and certainty which is so important for businessmen. So I think
Right.
with that, I would say it's a good, prudent budget, but maybe a little bit more could have been done.
Okay, Uday.
No, so I think Jairaj has summarized again very well in terms of the path and stability, certainty. I would actually mention two asks which are unfulfilled in my view. Whereas government has focused on specific sectors, there was also an ask, an expectation that when you are really, focusing on manufacturing, right? I mean, the 15% tax should have come back at least with a with at least few years, because it was introduced just pre-pandemic, and then we had 2 and 3 years that just gone into pandemic. We didn't receive, get any benefit out of manufacturing, and there are various statements on manufacturing which are being made. There would have been an incentive to be given to new manufacturing unit at a sunset date which is already gone. March 2024 could have been extended by few years so that you have new projects focusing on manufacturing. And the second thing, in view of this uncertainty looming around the tariffs, particularly to the US, right? Also, there was an expectation whether exports will be incentivized, and there could be a limited period tax incentives on account of exports being reintroduced. Maybe specific sectors, but and focusing on country like USA. Again, we didn't see that part, maybe, but it's ultimately is a question of maths of collections and expenditure. But these two things could have again further added a lot to the uncertainty part, which tariff has really bring
Right.
it to the country.
Right. Thanks, Uday. Gautam, last word.
So I think I'm a little optimistic on the budget, maybe. So I think from a indirect tax and customs and trade, the themes have been consistent. So that is one positive. We've not done introduced too many new themes: make in India, export, competitiveness, trade facilitation. All we've been walking this journey. So moved along that. So I think that is something good. From the global tariffs geopolitical scenario, we picked up sectors. I gave the example of marine, leather, which is there, and minerals. Now, how much that translates into actual benefit, I think we'll have to wait and watch. But clearly, there has been a thought process which has gone, given what is happening in terms of the trade agreements which we have signed, given what is happening in account of US tariff. So these two again positive. Third, from experience, from GST, clearly there is a roadmap. We didn't speak about it, but again, getting the entire ecosystem automation around the customs in the coming years, which again is a 2 year window which they're looking at. I think that is something good. To bring about more ease of doing business. There is a faster route to market. They want to get the customs clearance done within a short point in time. So I think all those initiatives will definitely, given the current scenario, help the supply chain move faster. So as I said, a little optimistic on what has been said, and the good part is it is continuity. It is towards stability and predictability.
Right, but we didn't talk about GST because I am sort of assumed that GST was not going to be discussed in any case in this budget because it falls outside. But is there something that you feel that could have been done specifically on the administrative side?
So GST, just to give you, whatever was discussed in the 56th council meet in September last year, all those proposals have come out. It is forming part of the bill, and then once the bill is enacted, they'll get implemented. One very critical is on the concept of intermediary, just to give you a sense that there is a concept of export of services from India, and these are zero rated, no GST. But there has always been a dispute on certain services like marketing, whether they would qualify as export or not. And therefore, if they qualify technically as an intermediary, there is a 18% GST, which is a cost to the overseas. So this entire concept of intermediary is omitted now. It is no longer part of the GST legislation, which effectively will make our services more competitive. So 18% cost will go away to a lot of services, and that was also the main theme when you heard about services in general. When it was said that we want to make them more competitive, so this ties in with the entire concept. And I think worth mentioning on intermediary, there were certain smaller changes that refunds should be given provisionally in a quick span of time. Post sale discounts, I'll not get into those, but those were all discussed and approved by the council meeting, which have been now forming part of the budget bill, which will be enacted.
Right, but most of the litigation is in that area, isn't it? Post sale discounts.
Yes. So post sale discount, as I said, is also clarified. So it is prospective, but as what I would believe, because it's a change coming into the act. So yes, there were disputes. You are right in post sale, principally saying that you need to have agreement which should the distributor should know prior to their purchases that these are discounts which will be offered. So some of these conditions have been removed, linking credit notes to invoices. So all those linkages, which were just conditions, have been removed, and therefore, if it's a post-sale discount, you will get those benefits. So from a future perspective, intermediary, post-sale, all good. Cutting down litigation. I think that's definitely a welcome step from GST side also.
Right,
Govind, if I
Gautam.
may just add one thing quickly. I
Yes.
completely agree with what Uday said, and I didn't cover it in my closing remarks. But I think the government needs to have a lot of focus on manufacturing, and it is not only to do with reducing the tax rate to 15%. I don't know whether it's almost an admission that we've missed the manufacturing bus, but it's something which we really need to get our hands around and figure out what we need to do to up the manufacturing game. And it is not just the tax rate; it is huge amount of employment for people instead of just being in the Zomato world of delivering stuff. We need to have our younger people involved in the shop floor, in the manufacturing. And I think it's a huge opportunity to create assets, to invite investment, which we've been missing, to make the bureaucracy much less. So it's not just tax, as I said, there's a whole lot of changes to be made if we want to attract investment into manufacturing, both domestic as well as foreign.
Right. We've run out of time completely. Uday, Gautam, and Jairaj, thank you so much for joining me today on this special edition of the Core Report, looking at the fine print, particularly in tax, direct and indirect. Thank you so much.
Always a
Thank you.
Thank you.
pleasure.
Thank
Always
you,
a
Govind.
pleasure, Govind.
Thank you,
Thank
others.
you.
Thanks. Bye bye.
Thank you, Jai. Thank you, Gautam.
Thank you, everyone.